So hi everyone, thank you for joining us. I'm Matthew Lovatt and I'll be your host and moderator today. I'm a member of the Executive Committee of the Singapore FinTech Association and also a director with Deloitte Singapore. As you know, Singapore FinTech Association is a cross-industry, not-for-profit industry association, which is designed to facilitate collaboration between stakeholders across the FinTech ecosystem. Today's session is jointly brought to you by STACS and the SFA. We'll be focusing on distributed ledger technology applications to asset and wealth management and real-world use cases. I'm joined today by Dan Sleep, Senior Vice President, Market Advocacy and Innovation Research at Northern Trust, Nadeem Juheed, Head of Investment Solutions APAC at BNP Paribas Securities Services, Rajneesh Sharma, Head of Quant Portfolio Strategies at Espring Investments, and Benjamin So, Managing Director at STACS. And before we get going, I'd perhaps like to invite each of the speakers to briefly introduce themselves. Dan, would you perhaps like to go first?
Sure, happy to, and pleased to be here. I guess by way of introduction, further to what you said, so I work as part of an innovation and advocacy team at Northern Trust. We're a relatively focused group placed globally. We have a mandate of exploring new territories, operating models of the future, and with that, some of the emerging technologies that go with that, as well as an advocacy strain to that. So industry participation, working groups, and so forth. I'll leave it at that.
Thanks, Don. Nadeem, would you like to go next?
Yes, thank you. Nadeem Juheed, I'm based in Singapore, heading in APAC what we call the investment solution. Basically, it includes middle office, analytics, some data management. So pretty much all the nitty-gritty stuff that our clients are looking at whenever they are looking to improve and specifically looking to involve digital solutions around that. So we'll be having some good examples around that today.
Thanks, Nadeem. Rajneesh, would you like to go next?
Yeah, hi. I work with Espring Investment. I am a head of quantitative portfolio strategy team. We work with a fundamental equity team, close to $45 billion of AUM. We devise the quantitative strategy for long-term, basically returns for the clients. And during the due of process, we use the market data, which is like traditional data set, but then we also leverage on unstructured data, more modern approach like machine learning and AI to drive our investment process.
Great, thanks, Rajneesh. And last but not least, Ben, would you like to briefly introduce yourself?
Thanks, Matthew, and thanks everyone for taking the time to attend this session. So my name is Ben. I'm the Managing Director of STACS. So we are a Singapore FinTech company that has produced a platform that is supporting the financial industry, including asset managers, banks, and stock exchanges, to be able to unlock value that has been trapped in the 50 years of legacy infrastructure. So it'll be good to discuss these topics today. Thank you very much.
Thanks, Ben. So just before we dive into our panel discussion, if anybody in the audience at any time throughout today's session has any questions, please feel free to post those in the chat function at the bottom of the screen. Alternatively, we'll be moving across the breakout rooms at around 12:30 after the panel session, so please feel free to save any questions for any of our panelists then. So perhaps to get going, we'll begin by setting the scene. Ben, would you perhaps like to kick things off by explaining what business problems DLT can potentially help fix and what you're seeing in terms of macro trends in the asset management and wealth management sectors?
Yes, so thanks, Matthew. So, we founded the company 2 years ago at a time where we had a few industry veterans from the financial sector coming together, okay, and of course, technologies like myself, okay, to form STACS. And the basic premise, that we founded the company on was to try to provide newer technologies, because we feel that, we felt at the time that in the last 50 years, the world of the financial market hasn't really changed in the sense that we are still using traditional legacy infrastructure. And I'm talking about the B2B, operations here. I'm not talking about, I'm sure many people are now using mobile banking and trade stations and, applications that can let you trade practically anything anywhere. No, but what I'm really talking about is the, processes or the plumbing between institutions. So that has really not changed in the last 50 years. Okay, since the DTCC became with their model of CSD clearing in 1973. So of course, that was a time where the market was many times smaller than it is today. As a capital market, we have grown multiple folds since then. Yeah, so I think that we are now seeing a statistic that $800 billion is locked up every single day, just in the processes of linear dependent processing. So a few of us came together and we're thinking, why can't we use newer technologies to fill this gap? Why are we going to accept $800 billion stock up every day, and it's not even effective. It's not even effective because 6% of trades fail to settle on average. And this leads to billions of penalties being paid. Okay, and of course, billions more in not penalties, but losses from wrong trades, wrong allocations, and wrong reconciliations, wrong settlements, etc. So those were the problems that we were facing and we were thinking about when we started the company. And since then, been quite happy that of course, with the help of many participants and many veterans and experts like yourselves in the rooms, okay, that we are able to develop and deploy a platform that has been able to overcome some of these issues. And of course, the topic of today, I believe, Matt, you asked about the DLT technology, right? So, the premise is that we felt that as a distributed ledger, we could then allow for multiple participants to now be on the same platform, handling transactions in a concurrent fashion. Instead of being a linear dependent process, it will now be an ongoing concurrent process. And instead of having a reconciliation done in 2 days, we could have a reconciliation done immediately. Okay, concurrently. Of course, your settlements could still be flexible. It could be a T+1 or T+2, but at the very least, we want to provide the confidence that when you settle, okay, it is the actual, okay, correct, okay, counterparty that you are settling with. So those are the various concepts, okay, of DLT that we have already been able to deploy. And of course, with the use of smart contracts, I think that, okay, this is the background information of how, okay, I mean, it's not just us in the game right now. There are so many different types of technology providers out there, okay, who have already proven that such technologies will be able to bring great benefits to the industry.
That's great. Thanks, Ben. So I think some of you may be aware that the International Securities Services Association and the Value Exchange have recently published a report that reported that 79% of financial services firms have dedicated resources to DLT today, but that only 1.6% have implemented a live implementation. So I'd maybe just like to open forum to the other panelists. Would any of you like to perhaps comment on what that means in practical terms?
Maybe I'll start and pick it up from there. So I guess in essence, what we see from that straight off the bat is it's hard to get to production. I think the reality that everyone faces in moving into these new territories is there's a technical challenge, there's an operational challenge, there's a legal challenge, there's a compliance challenge, and then there's a people and operational kind of overlay to that. There's a lot of moving parts. So groups such as my own, and in the world in which we operate in the Northern Trust context, try to navigate some of that front end where it's exploratory, we're in the discovery phases. There's a staged approach to things whereby you'll see lots of firms starting to dip toes into the water, start to look at proof of concepts, starting to just rationalize what the world might look like and just see how they could enter into that fray. I think that straight off the bat is what I'll give as a first line. Happy for someone else to contribute there, or I can keep going if you wish.
Maybe I can...
Sorry, Nadine, go ahead.
All right, thank you, Renish. Maybe Vicky, I can add to that, and you're completely right, Dan. That there's many opportunities there. I think we'll talk about it a little bit further down the line, but there are many opportunities to use distributed ledger technology. However, the swap and the transformation of the idea into real world life examples is still is still ongoing. We've had within BNP Paribas a good example of how we've been able to make that transfer happen together with STACS and Espring as well. So there are examples there, and there's many more. But I think the hype that we've probably seen in 2015, when everybody was convinced that this technology would probably revolutionize the entire trade lifecycle management. I think it's probably a too broad approach to tackle it from front to back. What we've seen works is to really focus on dedicated pain points, looking at definite pain points where you look at different options, and if one of those options is DLT's technology, then it's probably a good way to start working on that and to do a sort of design thinking approach towards it, by assessing whether we can implement this on a fast but try to fast but allow yourself to fail as well exercise in that, and that works pretty good. So that's our experience today.
That's great insight. Thanks, Nadeem. Rajneesh, I think you were also going to comment. Is there anything you'd like to add?
Yeah, I mean, it's a great technology and everyone believes in it. Everyone knows that it reduces your cost. It has an efficiency. I think the adoption of it is a bit of an issue here because there's a learning curve, and people think that the blockchain is it's a new technology. We are not used to it. So any new technology that we are adding adds to a risk and a challenge, right, of the learning curve. So that's the one driver, one problem that we see. The second is, at this moment, this is still the early life cycle where the early adopters are going into it. So companies like Espring, they're very traditional. We see that there is an opportunity, and we see that this is revolutionizing a lot of trade cycle, even other things like investing, right? Accounting, for example, or proxy voting or ESG, or a lot more other aspects where we can use these DLTs technologies. So we are waiting for the industry to come forward and having to be not with the early movers, because that's not the industry we are in, right? So we are in the investment industry, or most of the financial industry thinks that that's not my core business, right? But it does impact the core business. So I would say that industry is waiting for other participants to go in together, and everyone understands the value, but nobody wants to be the early adopters. And that comes to the chicken and egg issues. And I talked to the other companies. I was like, what's your view about a lot of new technology coming in? They said they are great, but then I don't want to be the first to go in there. And so why not? Because how to convince our people in management, and how to convince that we are going to a different business. So STACS, companies like STACS are doing a great job of putting together different industry participants and making sure that we all come together and understand the value, and making sure that this is the new technology where you don't have to be hesitant. There's a learning curve, but through a different engagement, we can start building it together on top of it.
Some really interesting insight there. I mean, I guess I personally, I'm perhaps not as deeply involved in some of these applications as the rest of you, but I can sort of see what you're saying around. Initially, there was a lot of hype, there was a lot of interest. But as things seem to have matured, the people have started to realize that actually, but blockchain DLT is not a cure-all for every problem. And Nadeem, picking up on something I think you just said, was really the dynamic has changed, where people have started to ask, okay, what is the problem? And what are the available solutions? And is DLT one of them? So the dynamic has perhaps shifted slightly, and I see that I guess across my own customer base, and also from my engagement through the SFA. Ben, in terms of what you're seeing in terms of that dynamic and that approach, I think what Rajneesh was just saying was that stakeholders like STACS obviously have an important role to play in helping build those ecosystems, etc., together. But are you also seeing that trend in terms of when people are coming to you and looking for particular solutions, have they already got DLT in mind, or do you quite often have to sort of work through the different alternatives with them in order to try and ideate and discuss where DLT might be best deployed?
Yeah, so thanks, Matt. So of course, I totally agree with all the co-panelists' views just now. Like for example, when you all mentioned that we are targeting various parts of the life cycle instead of everything at one go, I totally resonate with that. Because sometimes it's just easier to pick up quick wins so that we can scale up further. And of course, as STACS, our job is to make such transition as painless as possible. Yeah, and to your point, Matthew, yes, we definitely need to work together with the financial institutions. In the sense that while we are trying to provide new technology, we are not trying to uproot the traditional models of the financial markets. So I think that in some of our real world experiences, particularly with Nadim and Ratnish, with BNP and Espring, we have actually been working together to co-develop various solutions that are very targeted towards certain pain points. So that's something that I find meaningful. Rather than us trying to build something and wait for them to come, we are actually working closely with the institutions to identify the pain points, to do some design thinking, to do some ideation, and to go to market together. And that's something that I'm seeing. I mean, we've been in this business a few years now, right? So I'm same as all of you actually. So in the first section of our lifetime, we had to do some form of education or advocacy. But recently, in the last few months, we realized that institutions are coming to us with an idea already, with a vision of what they want to achieve and a certain very clear, proposition of what DLT could possibly provide them. So it's becoming much easier. And definitely, as a technology firm, our job is to bridge this transition, through better implementation to interoperability, such that it doesn't really affect any of these daily life of the professionals using these systems.
Sure, thank you. So I guess that's
Matt, maybe I add to that. I think Ben just touched on a really key point that we probably didn't cover fully enough, is the element of integration and interoperability. Where everyone's operating in the traditional market infrastructures and the businesses they do today, whatever it is, things don't always mesh. So taking something live into a production setting doesn't always make sense against the backdrop of traditional flows and traditional market infrastructures.
Yeah, it's an interesting point, Dan, and thanks for flagging that, because I think that helps set the scene for sort of the next part of the discussion, which is really sort of moving forward to discussing some of the real world use cases and looking at some of the projects that each of you have been involved with and talking about your innovation journeys to really, I guess, try and put a bit more substance behind some of those points that we've just touched on. So it'd be great if we can sort of move on to honing in on some actual practical applications in asset and wealth management and better understand how sort of DLT innovations are helping some challenges. So, but perhaps to get going from that perspective, the first case study that we have concerns a collaboration between STACS, BNP Paribas and Espring, and that relates to specifically asset wealth management. Nadim, would you perhaps like to introduce that solution and share any insights about opportunities, particular pain points, and how you've been tackling those?
Yeah, it's a pleasure. So the project that we've launched together was called Mercury. Now, let me first explain what it's about. So it concerns derivative trades and listed derivative trades. So that's future and options. And you have to imagine that when you trade a derivative trade, there's multiple participants in that chains, right? So you have your fund manager, you would have your broker, you would have your clear, and a service provider like ourselves, BNP Paribas. On the back end, you also have a custodian. So within this process, you have to transfer data from the different parties to make sure that a transaction is processed correctly. Now, what we've noticed specifically for what we call derivative contracts is that the fees that are associated to those executions, so that's broker fees, clearer fees, they are always either old, not updated, not the correct ones. So these fees are creating a break in that process, in that life cycle. So what happens is that when the trade has been negotiated by a fund manager like Espring, executed by the broker, and then transferred to the clearer, when we as a service provider on the back end receive that trade, it just doesn't match up. We're missing types of that data and information. So what we did is, together with Espring at first, we've tried to identify how we could make a change in that. And one of the ideas was to say, well, you know, there are so many participants. Let's have a look whether DLT technology can help us out. And this is where we involved STACS. So the three of us locked ourselves up in a co-design room and started thinking for hours and hours on end on how we could solve that problem. And in the end, we came with an idea, is to say, why don't we use indeed the distributed ledger where we store that information, so that missing information that keeps getting, you know, the breaking in that life cycle. Let's store that in DLT and make sure that that information is then shared among the various participants. So shared with the fund managers, shared with the service provider at the same time. So that's what we've developed. We started out with a test phase. We did it with, you know, again, it's related to derivative contracts. So we started out with a test phase, and the results were impressive. We've reduced by 84% our breaks. So that's a massive change. And all of that because we've decided to implement a simple technology. Now, when I say simple, it's not that simple, but the way that it was developed and implemented, the shortness or the development cycle was so short. We've never seen that happen within the investment bank or the financial services industry. It's something we could have was developed in just a couple of months' time, and then we started rolling it out, and now it's part of our daily production from, you know, with together with Espring and with STACS operating it. Now what we've seen is the benefits that it brought in that short time span. Now we're already starting to look for the next phase. So it works well. So what can we do? What more can we do? So we together again with our friends. We are looking to say, well, let's even you know, beyond just the fees, can we, for example, include other instruments? Could we imagine that you know, we have brokers and clearers that are directly implementing or changing the fees schedules into the blockchain instead of us doing that together with Espring, which again would greatly simplify that process. We could even imagine that the confirmation of trades, which is today happening outside of the blockchain, why don't we integrate it directly into the blockchain? So it opened up a whole new world of opportunities there, where we've seen that the first phase, we're just managing the fees within a blockchain environment and share that among the different participants, has been very, very efficient and reduced a lot of the operational risk associated to that. But now that we look at the second phase, we see that we could almost disrupt the way that we manage derivative trades across the life cycle. So for us, that's a good example of saying, let's look at a pain point. Let's make sure that that specific pain point in that life cycle, so not the dealing, not the confirmation at broker side, not the settlement side, but just that specific pain point. Can we use a technology? Yes. Can we use DLT for that? Yes. And now that it's in place and it's working, what else can we do with it? So it's almost, you know, from a bottom-up perspective, we're believing, we're all believing that this will probably change the way that we manage derivative trades going forward.
Interesting. Thanks for sharing. And Ben, having worked with BNP Paribas in connection with that project, what are your views as to sort of how that process developed and the specific applications, etc.?
Yeah, so totally echo Nadim's perspective, which is, you know, where we got together in the room and we decided to do this together. That's when we could really get the front row seat, you know, into how the operations of the capital markets could get better. Yeah, so I think that, you know, obviously DLT is a new technology. Okay, the fact that we haven't solved this problem 10 years ago is just simply because of the lack of such technology. So the fact that we were able to now bring together different participants to share their fee structure, Okay, as one very specific example, on a common ledger, that is where we are able to fix a pain point immediately. And yes, it was done in a development phase of 2 months. Okay, obviously we already had some ready infrastructure ready so that we are able to do so. And that also gives us great encouragement, because for us to further scale up, as Nadim mentioned, going to new asset classes or tackling other, sections of the value chain, that will become easier too, since we have more and more capabilities and already infrastructure that's been deployed. On that note, I actually want to just point out, maybe just give me a 30-second plug, is that today we actually part of a new press release that was released today. Okay, so we were involved in a project where the Singapore VCC, Variable Capital Company, was tokenized, okay, and actually put on the blockchain. So we were one of 2 blockchain providers working with InvestorX on this project. It's actually MAS-FSTI project. So today there was a press release. We are part of the project where they were using our infrastructure to also tokenize the funds. So in a related point, that's also where we are seeing, okay, where, if we extend such value chain, okay, processes, okay, one natural thing to do is to tokenize in the beginning, okay, the fund itself, okay, and that's where we could start to imagine, okay, while we have already started to take over some of these processes in the value chain, as mentioned, trade processing. What if we could start to also identify other propositions, like, when we are creating a fund, okay, when we are trying to launch it or structure a legal structure, like a Singapore VCC, there's actually quite a lot of work involved here. All right, and then when we are trying to distribute it, when there are subscriptions and redemptions, and then of course reporting and fund admin, all those are very manual today. Okay, and a lot of man hours and sometimes manual errors are happening. So what if we could automate some of these processes using the DLT? So that's a successful POC that's been done. Of course, we are hoping to extend functionality there. Okay, and in other words, we are able to then cover the full cycle of, okay, funds over time. So that's really important, just to echo that we are doing this in conjunction with many other partners, financial institutions, tech firms included.
Thanks, Ben. That's it's a really interesting use case, because I think when you have something like the legal structure and the entity and its operations fully tokenized, I think that then becomes a very powerful tool, and that I think the use cases in that across investment management are quite large. So I'd be very interested to sort of understand that project in a bit more detail myself. I think I'd spend a bit of time reading up on that. Be interesting. So I guess moving to some other perspectives, I'm perhaps also interested to know what our other panelists' innovation journeys look like. Dan, how about Northern Trust? How does Northern Trust's innovation journey look, and to what extent have you been considering DLT as a means to tackling sort of particular pain points that NT has identified?
Sure. So I guess I start with the innovation journey and how we approach things. So the formation of my group in the first place was a big step towards, structuring the right people to focus on the right things in this space. So some of our journey and some of the use cases I'll talk to in a moment really trace back to around about 2015. That's when meaningfully research discovery kind of processes began. Again, cumulative interest through those times in terms of blockchain technology and DLT in itself. Obviously, there was more of a trust type problem back then as well, and the associations with crypto and the like. So I think that was something that's evolved in parallel. We didn't touch on that earlier, but it's probably worthy of mention. Yeah, so in terms of what happened next, my group initiated, incubated, and channeled through use cases in the private market space, ripe for innovation, labor intensive, paper heavy type stuff that lacks maturity and innovation in itself. So 2017, we launched a small scale Guernsey based private equity administration service on blockchain. So that created an ecosystem of users, contributors, and we backed that capability with IBM. So that was one of our first to market type experiences, and we learned a lot through that process, as we have with every other journey. And I think that was just it. Take what you've learned from those things, point to where the opportunities exist that are realistic, that show value, and the value can accrete in many different ways. It's not always about commercial value. So the operational overheads, the risk decrease that sits alongside operationally and otherwise show value for us. So 2017, as I say, moving on from there, there was another iteration over the top of the private equity space where we looked at smart contracts. And that was really just trying to show value in the possibilities of programmability. Private equity and private markets more generally known to be very legal intensive, a lot of paperwork, a lot of handoffs back and forth and whatnot. Why couldn't that be done in a blockchain ecosystem? So again, that was something else that we saw through to a launch, and we learned a lot. So anything that contains the legal terms and across whether it's derivatives that Nadeem was referencing and the ISDA kind of space, or otherwise, that there's a lot of paperwork out there. There's a lot of legal documentation that shows opportunity as well as possibilities of embedding that into smart contracts. You can then drive, looking forward, just looking more broadly at the possibilities, what that can do for you. So that was our moves in the private market space in the early stages. Some of that capability, we then we look at things a little bit differently. How can we get to market? How can we bring innovation to the industry? How can we make a difference? One of the things we did in that sense was actually licensing out that capability and the technology to Broadridge, who've then taken that to market. So they rolled that out, and it's created an ecosystem in itself. So we don't want to contribute innovation. It's not about any longer about what you can do within your own four walls, if you will. It's about what kind of ecosystems, what kind of partnerships that we can formulate, which everyone has a vested interest and can accrue some value from. So latterly, and keeping that theme of partnerships, we had our first foray into more of a digital asset kind of setting with a partnership with Bondi Value, so Singapore-based bond exchange. So again, benefits of blockchain show through in many facets here, whereby the fractionalization ability, so tokenization, fractionalization of underlying assets, creating digital instances of those, and obviously everything that goes with secondary market kind of ethos. So liquidity, on both sides of that, financing and so forth. So again, opening up marketplaces, and that's a role that we see ourselves playing on an ongoing basis as we explore new territories. And I should probably recap for those maybe not so familiar with Northern Trust, we've got a couple of different lines of business. Our bread and butter and what we're typically known for is our custody and asset servicing business. So we in our group at least have a mission of disrupting ourselves in many cases, and just challenging the conventions that pre-exist, as well as the ways of the operating models of today. So there's a couple of called out instances. I'll probably just mention, just to cap things off, our crypto foray with Standard Chart. That was also a partnership. We did that under a breakaway under the name of Zodia, and that's an institutional grade custody capability in the crypto space. So there's many different avenues. I guess just bringing it back to the underlying technologies and the opportunities that exist. There's many different ways that you can cut and slice value from blockchain. Everything that goes to the roots of transparency and governance that sits across, shared transparency, shared consensus, to what the guys mentioned and the work they've done between Espring and BNP featured here. Reconciliations could be a thing of the past. If there's broad-based adoption that take away the unknowns and the ambiguity of moving parts between exchanges, then there's a lot of potential in that space too.
Sure.
I'll probably pause with that.
So there was a question came in from Rolf when you were talking, and pose it to you, if that's okay. I think it might be, I suspect you might be able to address it relatively quickly, but the question is, if fees are shared on the blockchain, are finance institutions not afraid of their competitors being able to take advantage of that information to gain a competitive advantage?
I think that might actually be a question to us because we
Oh,
talk
right.
about the fee schedules on the blockchain.
Yeah,
so I think I can take that. Yeah, of course. While we use the blockchain technology, okay, we really want to also have governance in place, and that's where, you know, when we talk about such reconciliations, it's still a bilateral, or even clearing and settlements is still a bilateral process. Okay, or if you have a custodian involved, it's still a bilateral between the custodians, right? So what we are doing here is actually, by using DLT, we are actually even more capable of enforcing, you know, who can read what. Yeah, so that's where the technology can actually allow for privileged IDs, okay, privileged addresses, okay, to be able to only unlock, to be able to unlock information that only they are allowed to do so. Yep. So we use the DLT as a means of transmitting such verifications and attestations, okay, without, you know, compromising on confidentiality.
Thanks, Ben. So Rolf, I think high level there are technical fixes to that that can help make sure that sensitive information is not readily available to other participants.
And Matt, I'll probably just add one thing on the,
Sure.
on theme, because I think it's something that's an emerging topic, certainly in some of our conversations, just around data traceability. And I think it's linked to that partitioning and the governance of ownership of data in a world where we're talking about ecosystems and shared you know, universes on networks. The value of data is not really up for debate. It underpins everything, and everything that we're now doing on blockchain is dependent on data. So I think we just have to keep that tied in. Sure,
thanks for flagging that, Dan. So perhaps Rajneesh, moving back to sort of innovation journeys and perspectives, how about with Espring? What has Espring's innovation journey been like, and to what extent have you seen Espring considering DLT as a means of tackling particular business challenges?
Yeah, thanks, Matthew. At Espring, the core of Espring is innovation and delivering the better performance for the clients, and that's very much core to it. So 2018, we started adopting the new trade platform, which is Aladdin by BlackRock, which is the largest trading platform. We engage BNP for our performance monitoring, and we have several other, vendors and partners who deliver us the best source of data and technology. Now that's the industry standard that we are following. Now there are a lot more challenges that we face at this point in time. Especially, I can talk about from the investment point of view, because that's where we are very much focused to. For investment, what we want to have more better disclosures. We want to have better proxy votings. We want to understand the companies in more details where the information is not available, and something like DLTs can provide us. So we look at many companies where supply chain, you can see last 1 or 2 years due to the COVID, the supply chain has been a disruption, and you will find that so many companies are getting affected because of their locations and where the factories and where the supply chain is coming from. What's the, if you want to, get earlier, the shipping used to be like a month. Now it takes like 6 months and even more for some of the cases. The factories are closed in the spaces. How to have a better disclosure around that? How to know that which companies are ahead of the other companies? And the information is not readily available, because currently what you need is you can go on the news, and the various news does not give you. So if you can have supply chain very much coded as a part of the, on the blockchain itself or DLTs, that will enable us to understand what exactly is coming and where the trade flow is going on. That is a big driver of getting ahead of the game. So you understand that the semiconductor companies that are, for example, having a semiconductor, is very much constrained by the supply, because the demand is increasing, the supply is not.
This is one example. Biotech is another example. So having the supply chain based DLTs is very much integrated, and that's what we are exploring at the moment. How do we get better proxy voting? And at the end of it, we also look at the ESG, which is core of it, because our mother company, Prudential, they are going to have by 2030, they are going to have a zero emission. Now that's a bold commitment to make, but then to reach there requires a lot more commitment, and commitment not just from the data provider, but from the source itself, to understand who are the polluters and how can we not finance them, how can we do better, having a better disclosure directly from the source. All this requires a lot more future technology where we can have a more transparent and a technology that can enable both the parties to be, to be into the, so what we call is a data dividend, right? So both the parties should be able to get the benefit out of it, and the DLT seems to be a next step for that.
That's great. Thanks for sharing, Rajneesh. So a few use cases there and some interesting insights on actual applications. Turning to a practical matter, that being regulatory support. Regulatory touch points are clearly material concerns in financial services. I personally joined a webinar earlier this week that was hosted by SFA, the Asian Securities Markets Association. And on that, one of the panelists emphasized a really important point for financial services stakeholders, which was that whenever there are tensions between innovation and operational resilience, resilience always wins out. And I think that was one of the points that you were making a little earlier, Nadeem. I guess with that, I'm perhaps interested to hear about BNP Paribas' experience of regulatory challenges associated with DLT deployments in regulated sectors. Are you perhaps able to share what your experience has been working with regulatory bodies like the MAS and industry associations like IMAS to help operationalize what you've been working on?
Yeah, thanks, Matthew. So yeah, and as everybody knows, regulations in the financial industry, it's a continuous topic. It started probably 10 years back with the overhaul around derivative transactions and the transaction reporting around that. Now we see that ESG is the next big thing that's coming up. So we're always looking to see how we can improve this, right? How can we make sure that some of the reporting that our clients need to provide to regulators, how different parties can contribute to that reporting and make sure that it's accurate and that everybody signs off on that. So DLT could be a great solution for that. Specifically, if you have, like ourselves, a service provider, but also an asset manager, and everybody needs to sign off on the validity or the exposures, for example, from a derivative point of view. So that's a great technology. So we're working on that. We're looking at to see with again, if you do it on yourself, it's probably not going to work. So the best way to do this is to involve all the necessary parties around you to look at that. Another way of using DLT, it's not directly related to regulations, but it is part of our KYC. I mean, it indirectly it is regulatory driven. So within our KYC process at BNP Paribas, as you know, we have to go through an extensive vetting process, making sure that the clients that we are onboarding, as well as the participants that are involved in our investment process, have all the necessary details available, have the necessary authorizations, etc. So it's a lengthy process that involves obviously our clients team, our compliance teams, as well as our legal teams, as well as our the relationship managers who are involved. So all those different parties are requesting different types of documents, and this is again a good example. Whenever you need to have different parties. And again, coming back to that previous statement, that previous question, how can we make sure that some of those documents are not shared with everyone? That's a great example of how DLT and blockchain can be used with definite subscriptions, and definite environments. So for example, again, coming back to KYC, we have legal teams that are able to see legalized or legal documents related to that KYC process from the client. We have a relationship manager will look into contracts. Those two teams will not be able to look at the other types of documents. So that's completely separated in the environment. So what it allows is you would have one client that gets access to the blockchain environment, drops all their documents in there. Then you will describe for each of the necessary teams that need to do their due diligence to look at those specific documents in their environment and close that off. So what we've noticed is that it greatly improves the KYC process, which sometimes could take a couple of months. So we've noticed that this is a good example of how we can reduce the time on processing, necessary and obligatory processes within the investment industry.
Thanks, Nadeem. So I guess pivoting away to another situation in which DLT has been deployed. Rajneesh, you mentioned ESG a little while ago. Are you perhaps able to share Espring's view as regards DLT applications in the ESG space? And that's clearly an area that's attracting a lot of attention at the moment.
Yeah, absolutely. So ESG is very much core to our investment process. And it's been there for quite some time now, and it's getting attraction as the regulators demands more of a ESG as a part of the investment process. So MAS actually authorizes and MAS requires us to have some sort of compliance and also transparency around the ESG. Now, one of the key challenge for the ESG is we are very much dependent on the data providers. So imagine that you have a universe of 15,000 companies. It's not practically possible to go to the 15,000 companies and ask them, okay, what's your climate impact, or what's your social impact or environmental impact or governance issues? So we rely very much on the data providers available in the various ways. These data providers collect the information in the best possible way, which is from the news and other sources, which is the publicly available sources. Quite often the data seems to be very subjective and the data disclosure doesn't really help. Now, that's a challenge, and challenge not that we face, but everyone faces. How do we solve these issues regarding, and that's the problem that probably the DLTs can come up and solve this, to have a standardized ESG disclosures. So each companies actually follow it. And if you want to understand, I was reading an article about the smart contract and blockchain. Actually, in some of the cases, when you eat the food or buy a fruit, you can know exactly where it's produced. So you can know the sources from where this produced, right? Why? And this is exactly the benefit of DLTs, where if I am having a company, let's say any company, Apple, I should be able to know exactly where this phone comes from, what's the climate impact of that particular phone itself, and then how does it arrive, where the shipping comes from, and so on. That's the power of blockchain and power of the DLTs that there is. It gives you a transparency, gives you a compliance, and helps you to understand the whole life cycle, makes you more responsible to some extent. So we look at this tool as a way for us to understand more deeply how the companies are engaged. And it's not just for mainly an auditing reason, like one may think that, okay, I want to understand how the company is. It's not. It's for both the companies to understand better, right? What's the demand of the customers looks like and consumers looks like versus what am I doing? Is it like misaligned? So for the companies, it makes them much better that there's an alignment of what market wants or market needs and what's the investor needs versus what we are doing. So it's good for them versus what investor needs is where I put my money so that I don't have a risk. Tomorrow, the temperature rises like 1.5 degrees to 2 degrees. There's a global warming, or let's say tomorrow there is social issues or any other issues. Are we safe enough? Is the bet that I'm taking the risk or not? So it solves the problem for both the parties, which is for the investor and the market in general, versus the companies to be aligning themselves. But at the moment, because it's lost somewhere in the noise, somewhere in the where there's so much noise across social media to news and all. And if I have to rely on those sources and the interpretation of that, I'm never going to be achieving really the impact of the climate and the ESG. So I think the big enabler to this whole framework is going to be via DLT. Is it going to be today or 5 years from now? We don't know yet. As I said, depends on how the industry is going to adopt. And as I can see, the regulators are taking, as you speak about the point, regulators are very key driver to that. EU has mandated that everyone who is investing even a single dollar has to be through some sort of ESG compliance. So compliance actually, so regulators are actually driving this very much for, and in this particular case, we have to give appreciate the regulators where there is a due, because regulators are often said, oh, they are sluggy and they don't really do a good job. Once there's something wrong happens, regulator steps in and learns from it. But in this particular case, actually, regulators are playing a much better job. They're coming up and they're mandating things like, you have to make sure that climates are safer. We have a safer future. And this is a great example where DLT can work together with regulators who can enable something really important for investors, market, and at the same time, the companies themselves.
It's really interesting, Rajneesh, isn't it? I mean, I have to admit, one thing that I've encountered through my role with Deloitte and being in professional services is the dynamic with the regulators is changing. I mean, if we think about regulation historically, it's been a very paternal process, and developments with things like technology, DLT in particular, it's almost causing the regulators to have to be much more proactive and to be collaborating with stakeholders on more of a real-time basis. And it's really challenging that paternal sort of approach to regulation that we've all been used to.
Absolutely. And if you say,
go ahead, Rajneesh.
Thanks. I mean, I just have a quick point. So what you said, regulators, I think what regulators want is a very simple thing. If you look at the regulators like MAS or any regulators in the world, they want very simple things like transparency, compliance, governance, right? Now, these are the things that they have in mind, which is a very strategic goals that they have. Now, strategic goals, when they go deeper, it translates to something not what they want. And that's where they need to be very proactive. What technology does is enable them to go even deeper and deeper than their strategic goals. So they want, compliance. They don't want money laundering. They don't want, but then how to do it and how to prevent that, technology is helping them. So you see that there's so many startups, they're having an anti-money laundering and they're building machine learning models on the top of this, credit cards and defrauding and things like that. You can see there's, tens of companies doing this, and they're enabling this so that regulators can leverage some of this to ensure that they are ahead of the game, or not even ahead of the game, at least they are monitoring and making sure the companies are compliant. So technology is a big driver for what we are today and how regulators have taken part in this ecosystem. Now, going forward, I think the regulators will be even ahead of the companies and even ahead of the investors. And that's what we can see, because the blockchain and DLTs are enabling them. Like, how do we have a better disclosure, bring in the companies and ensure that this is how we can do it. This is the framework that we can do it. So I think the regulators are now a part of the mainstream rather than what you said is a paternal framework. Yeah, we can't ignore them. Probably we have to carry with them, and we have to really get the value out of them.
And Dan, you were going to comment. What are your perspectives on that?
Yeah, I was just going to enrich one of the comments that Rajneesh made. I think that proactive concept is going to go several steps further, potentially, to the extent that in our earliest use case that I referenced, it was a small scale private equity administration use case, but the regulator was actually part of the DLT network. So they had a node. That's a distinct possibility that they'll do that in real time. And, some of the mechanics of this annualized everything will start to slip away if they're plugged into the network and can do things on a more real-time basis. Pros and cons of that, and I think it will have its own headwinds, but in terms of staying plugged in and being current, I think everyone would generally prefer that to feeling like they're in the dark on what their requirement is and the ability to meet those demands.
Yeah, it's really interesting development. So Ben, how about from STACS perspective? So I understand, well, the MAS's Project Greenprint paper is interesting. I understand STACS has been developing an industry-wide solution aligned with the objectives of that project. Are you able to perhaps share some background, maybe first on the project and then also on the solution that STACS has been working on?
Yeah, sure. So MAS has announced the Project Greenprint a few months back, okay, during the talk about creating the smart green financial center, okay, and actually they talk about providing support for industry-wide solutions, okay, that will be able to do exactly what Raj just mentioned. While many financial institutions are having scenario analysis, various type of climate science models, we have to make sure that the data is correct in the first place, right? Because otherwise, there will be a lot of impact. Insurance companies can go broke if they are insuring the wrong way, especially when climate is changing over the next 20 years, right? So that's where the intention here is to make sure that the data is being captured right at the project level. We are talking about, as Ratish was mentioning, 15,000 companies. Of course, we're not going to do that overnight, okay? But okay, we have a better chance if we use technology rather than manual inputs. Just a statistic that I learned just recently. In Singapore, there are 28,000 buildings, both commercial and industrial. So putting aside residential buildings, there are 28,000 commercial and industrial buildings. So your office buildings, your malls, and your warehouses, right? In Singapore, there's 28,000 of them, and there are only 22 certification providers. So each certification provider typically has one or two partners who can do it, very, very professionally. So typically, they will take more than 1 month to certify a building, which if I do the math correctly, I don't think it will happen in my lifetime. So in my lifetime, there will not be a chance that all buildings get certified at the same time. So we do need to think of how we could use technology to enable this. Right, so it's definitely, whatever that we're trying to build for the Project Greenprint is definitely not just only built on the blockchain. We do need to combine with partners in the data analytics, with partners with data acquisition technologies like IoT, such that we are able to capture such raw data, firstly, okay, from the projects. Okay, and then we could then aggregate that into entity data. When we talk about entity, we talk about scope 1 to scope 2 and scope 3. There's a lot of indirect emissions, which is cross-sector. We have started doing work with the transport and logistics sector, for example. Okay, we are already tracking some of the corporate fleets in Singapore, simply because they are the scope 3 of a value chain of somebody else. Okay, which should be a MNC or a DHL. Okay, and that's where this is important for the reporting company. So if we then continue to aggregate upwards, okay, on the entity level into a portfolio level for somebody like a Espring, now that will become more meaningful, because now you have, firstly, okay, certifications, okay, they are already out there, data providers that are already out there. Okay, so what I would call static data. Secondly, you will also then have the chance to have continuous data, okay, that is verified by a technology platform. Okay, and that will be able to empower, I guess, okay, more financial institutions, be it asset managers or even banks who are making financing decisions, or even insurance companies who are making insurance risk management decisions, okay, to have a complete picture when it comes to ESG. So that's something that is a very, very clear use case of the DLT in conjunction with other technologies.
That's great. Thanks, Ben. So
Ben,
go ahead,
please do. Yeah, thanks. You mentioned a very interesting thing, scope 3, because we don't have a scope 3 data. We do get scope 1 and a scope 2, and only like 10 to 12% of the companies that we analyzed have a scope 3 data. It's a challenge that we are facing too. And I don't see the answer in at least next couple of years. We have been chasing people to get the scope 3 data, because that's the ultimately missing puzzle of the entire what we call WACI score, which is carbon intensity score of it. So yeah, it's interesting to see that somebody working in that space is very, very important for investors like us who wants to understand what's the indirect impact of the carbon metrics. So thanks for raising that. Actually, this is very important to us on that. Thanks.
So obviously a very big focal point. So lots to keep an eye on there, I think. So I'm just gonna move on to next second slightly, because I'm conscious of time. I'd perhaps just like to turn to each of our panelists to briefly discuss other key projects that they've been involved with that they might want to touch on. Dan, I understand that Northern Trust has been considering DLT deployment of fund distribution and alternative funds. Is that something you perhaps like to elaborate on? And is there anything else you perhaps like to draw any attention to?
Sure. I'm actually going to just segue back to the segment we just closed momentarily. Oh, sure. Just a couple of thoughts on ESG and I guess the evolution that we're seeing. I think this year is going to be momentous. Just the number of things that are falling into place, the support that's being garnered, COP26 late in the year, of course, as well, an inevitable catalyst. From a regulation perspective, there seems to be new groups forming all the time. Lots of new acronyms for everyone to learn. The TSVCM as well, anchored in Singapore, so lots of carbon focus. So there's some good support there. One thing I would just say around the potential that Ben outlined, I think the potential is endless in terms of integration of ESG data into everything that we do in financial. You know, we represent multiple different kind of businesses here. I think one of the challenges that remains is, I guess, two-pronged, just to highlight, given the time we've got. One is the opaqueness of the data that's available and some of the markets that exist. So Ben gave an example there of buildings. That sounds like an easy one to measure, to quantify. There's a lot out there that isn't, and there's no really easy way to capture that. So I'll leave that one there as an open kind of segment. I'm sure you could dig into that another time. And then likewise, I guess the integration of that data for APAC specifically, where it's regulated at such different levels. So APAC, we all seem, I would imagine, vast majority of us here are in APAC. We all can appreciate the different regulatory approaches and maturities. Singapore is obviously a leading light, and MAS do a great job in you know, carrying the torch. But that doesn't mean that it's the same across the board in APAC. Again, IFRS standards. I think they've just launched another group that's aimed at sustainability just this last couple of weeks. The ISSB. So I read. And their mandate is to try and, you know, start to launch some of those standards into reporting, and I'm sure we'll broadly align with the Europe SFDR and so forth. So there's a lot going on in that space. I think there's a lot of maturity that's yet to come that will enable people to start benchmarking in the right places, find the right data sources, and that's just from the major players, and that's ignoring the cost of doing so. So I think there's going to be an interesting balancing act between the cost of accomplishing those goals and actually accomplishing those goals where it relates to ESG outcomes. So I'll probably park that thought with that, one for another day. In terms of what else we're focusing on, there's a lot of interesting areas. Obviously, very fluid space. You mentioned a couple of things there just from the outset. These are territories that we're exploring because we think they're interesting. Various stages of the game, some of it's exploratory, some of it's more thought leadership type. Just trying to challenge convention a little bit, listen to our clients, see where their interests are. Ultimately, we see ourselves in this forward-looking kind of 3, 5, 10-year time horizon as an enabler for access to those digital markets, to that digital, you know, ecosystem, to the data, to evolve the roles of Northern Trust legacy. So in doing so, we believe things that could be more momentous in that space will be things like digitized, you know, things that are digital at source, be it assets or funds, the tokenization, the secondary markets, will open doors and close doors in various facets. So some of that territory we're exploring more heavily. We believe that the alternative space is one of the more interesting ones because of the dynamics of the markets, the players, the data, and so forth. So certainly something we're looking at. Digital assets more broadly, I think there's more and more use cases coming out all the time, some of which are sustainability linked, some of which have, you know, great use cases surrounding smart contracts. I think we touched on that earlier. Just, you know, proof of impact, and it goes all the way through from as much as retail isn't our focus, it goes all the way back into that retail space where, you know, people in the future will most likely be able to get loans for, you know, their cars or whatever that might be, based on their emissions, or, you know, proof that they are providing offsets and so forth. So it's definitely a new world that we're entering into. So we're very interested in that kind of space, and I guess more from an institutional perspective, which is obviously our focus. Some of the ways that fund servicing could iterate through with the uses of some of these new technologies, DLT and beyond, to provide new opportunities. You know, whether that's diversification of asset classes, asset allocations into, you know, new and interesting instruments for ESG purposes, for, you know, alpha purposes, and then ultimately new services. So we, being the asset servicing provider of today, we're open to, you know, where we can contribute value in that new world of ecosystems. So I think alternatives are touched on. We believe distribution will change fundamentally. Remains to be seen on what scale and at what pace, but I think it's inevitable. So some of those traditional players will get shaken up a little bit. So we're doing some more thinking in there. And then just in terms of digital assets, we're a little bit more on the sidelines where it relates to the more abstract. Certainly where it's you reference to NFTs or anything in that kind of space. Interesting spaces, of course, CBDCs or digital currencies more broadly, be it stablecoins and there are other applications. I think we stay close to these. There's some viable use cases. The CBDC territory seems to be gathering pace in multiple regions. So it's certainly something we're staying close to.
Thanks, Dan. Nadeem, how about with BNP Paribas? Are there particular focal points?
So yes, I think I'd like to continue what Dan mentioned in the distribution area. I think for me that's a great example on how blockchain has become the standard in the funds distribution area. So imagine, 10 years back, or what is it, 6 years back, when an investor wanted to invest into a fund, so owned by a fund management company, you'd have to go through a TA, you'd have to go to a service provider. They will then send it out to the fund manager who needs to accept it and then comes back. So you have, I don't know, 4 or 5 different parties involved, and it could take up to 3 days. You send your order in 3 days. So what we've seen is with the development of the blockchain technology in that space, it's not 3 days anymore. It came down to just 1 day, a couple of hours within that single day. So what that shows is all those platforms that exist today. So you have Calastone, you have Allfunds, you have Funds DLT based in Luxembourg. All those platforms have now moved onto a blockchain-driven approach, which basically means you don't have any other choices. This is how it's now. Funds, if you want to invest into a fund, you'll definitely go through a blockchain environment. And that's become the new standard. Why? Because it's so much more efficient. It allows you to skip over one of the steps. So for example, all the work that the TA was doing, mostly very, very manual work, confirmation based, communicating with the different parties, all that is done instantly in the DLT environment. So that for me, that's a great example where, and we at BNP Paribas have been working with all those platforms to make sure that we're able to send them the orders for our clients and capture the information back so that they have it as soon as possible into their investment platform. So again, for me, that's a great example on how blockchain has completely destroyed and disrupted the old way of working in the investment, in the fund investment space.
Thanks, Nadeem. Rajneesh, is there anything that you'd like to maybe just add to what Dan and Nadeem have just been sharing?
Yeah, I think they're absolutely right. And I just like to one thing, a lot of what costs that asset managers have, and operational cost comes from the middle office and back office space that can be automated, right? So let's say we can use the automated smart contract and distributed ledger technology. We can essentially automate most of our operational process, including booking, the posting of collateral, let's say reconciliation, risk monitoring, P&L calculations, most of it. And that that can ease up some of the pressures that active managers often face because of the fee structure and the ETF. So ETF generally considered cheaper compared to the active investors. And active investors, they often have a very bulky process where they have there's a big middle office and the back office guys. So if we can automate some of it, we can be very competitive compared to the passive investment. And passive investment often does not have a risk control. You can think of, you're always, you don't have a risk team to look at your risk managers. So some of these active managers can remain competitive by using in the business by using these DTLs, which other way around, we can see there's a lot of outflow going on. So just the one point, I absolutely agree on the distribution point of view. We can see the distribution is going to change. The way we do investment going to change. The way we look at the ESG, IFRS, and STACS related, what Nadeem was just and Dan was saying, is going to change quite a lot and very dramatic. But then on the business side of things, it's also going to change a lot, because if you are not competitive from point of view from the let's say how much cost you're incurring on some of calculation, the P&L reconciliation, you're going to be out of the business. So one way or the other, you need to be there in order to be competitive, not from the other businesses, competing business, but also from the massive inflow in the ETFs. So
thanks for sharing. So lots of considerations, I think, and I'm conscious of time, but before we sort of start bringing things to a close, I'd perhaps just like to pivot slightly to just focus on some key learnings. And I'll perhaps just like to ask each of you if there are any particular learnings from sort of the involvements that you've had. Maybe Nadeem, starting with you, what would you say your top 3 learning points have been to date regarding DLT in the case of asset and wealth management?
Yeah, I'm going to probably repeat myself, but don't try to change the world. It's not going to happen. However, try to really pinpoint on problem that exists today. KYC was a great example, as I've mentioned. ESG is the next one, and what we've done with the Mercury project is, for me, a great example on how one specific pain point that's been there for years and years. Because it's so difficult to manage the fees from brokers and clearers. With this specific project, we've been able to, as I said, greatly improve the efficiency and reduce the operational risk. And I believe this is gonna, from that point on, we'll be able to increase the efficiency on the rest of the process and the life cycle.
Thank you. And Rajneesh, perhaps same question to you. Top 3 learning points.
Yeah, I mean, for me, this first one would be DLT is likely to underpin the future distribution model and value chain, as we were discussing earlier. I think the cost and time saving can be achieved through the DLT enablement. You can see how STACS and BNP has done as a Mercury project. There's a time saving and the cost saving. So it's a no-brainer kind of approach that we can take. But again, one step at a time, solving the specific issues and problems. And lastly, ESG and how it can enable the disclosures and proxy voting, and it can enable us an environment where it can be beneficial for both companies to have a better disclosures, regulators to take an active part of that enablement through the DLTs, and investors who can take a key role by getting the better information and making the wiser decisions for the future.
Sure, thank you. Dan, perhaps a slightly different question to you. What are your and Northern Trust's visions for DLT implementation in asset and wealth management in perhaps, say, the next 5 years or so?
Sure. Could cut that many ways, but ultimately, say on a 5-year time horizon, I think some of the aspirations, some of the ground level implementations on that kind of time horizon, we'd hope would start to scale. So they become more fully fledged networks, slightly more rounded. I think there's potential for, the not just the regulatory lens that we mentioned earlier, but also the the onboarding, the ML, KYC type things to be more integrated. It's all new territory in this digital space. So certainly think that that's got more to play. A learning as well as something that we're going to continue to see, I think, just because it's an ongoing experience, is the complexity of moving into this new territory for delivering business and solutions. Launching products is difficult in this space. I think that the legal, the compliance territory needs to be kept very close to the journey, so that everyone's going along for that ride. There's going to be some changing cultures along the way. That's something we'll continue to advocate for, both in the industry as well as within our bank as a group. I think, again, on a 5-year time horizon, given the last 2 years, it's hard to know what 5 years is going to feel like. It could feel like 2, or it could feel like 10. So I think we're just going to have to the pace of change is going to increase. I feel like there's a lot that's reaching a tipping point. I feel like the broad-based adoption of and the trust that's been built in the now DLT capability is starting to be seen. I think the way we started the panel was great to position me for this question now, because I feel like we're now reaching a point that people are comfortable to graduate beyond just POCs and start to make things become real in their businesses. And I think there's got to be a gravitational force, push and pull, I guess, towards true corporate adoption. So institutions are going to need to back these things. We've started to see that across our peer groups, dedicated resources in large scale kind of settings towards digital, towards DLT based efforts, if you will. So I think that's going to be a further catalyst for the next 5 years. But I do think there's got to be some regulatory foundation to that, and not just in any one region. So we, being an American bank operating in Singapore as I am, as well as many other jurisdictions as many are, that's challenging. I think that's going to be one of the constant headwinds, and I think some of the foundational acceptance by regulators and clarity that needs to be given beyond Hong Kong, Singapore, and the like. I think it's been really key to be able to drive that forward.
Thanks for sharing. And Ben, how about from your and STACS perspectives, for having a view across the market? What are your visions for sort of adoption and implementation over the next, say, 5 years or so?
Yeah, so 5 years is a long time in our industry. So considering what we have been able to achieve in 2, but anyway, many of these use cases brought up today, I do think that they are all quite interrelated, okay, to the use of the DLT technology and the benefits of the what DLT technology can bring. Yeah, so I began the session by talking about how we are trying to solve a 50-year-old problem, and there was a lot of legacy infrastructure just simply because it was from 50 years ago. Okay, so actually some of those things we could possibly retain, but I do get the point that we need to do it one step at a time. So we're definitely not trying to change the world overnight. Okay, we have seen from the industry many use cases or pain points, and that's where there are many different facets of how the DLT could be applied. Good news is, of course, that all of these are practically using the same kind of technology that can be expanded or portable or even interoperable with other systems. So I think a great comfort for us is that working in the asset and wealth management industry, okay, I always think that the asset and wealth managers represent investors, obviously. In other words, represent what every one of us are actually hoping to do, to get better returns, to get safer returns. And that's where, it's actually representative of people, of investors. And that's where we are able to really, if we are working together with the industry, we are really able to solve real pain points, okay, to bring about change, meaningful change. Yep. So in the next 5 years, I do think that, okay, we will have to, and we'll continue working closely with the industry, with the financial institutions, with the asset managers, with the service providers, okay, to be able to come up with better solutions, okay, to be able to come up with closer to an end-to-end life cycle, that will really bring about the best of benefits to the asset and wealth managers and of course to their investors.
Thanks, Ben. So I guess thank you to everyone. I think with that, given the time, I'd like to bring the panel session to a close. But for everybody in the audience, don't go away just yet. We've still got small group discussions to come. Before that, I'd like to say thank you to everybody for joining us for this webinar today, hosted by STACS and Singapore FinTech Association. Please look out for both STACS and SFA on LinkedIn to be updated on the latest DLT developments, FinTech news and events. I'd also like to thank each of Dan, Nadim, Rajneesh and Ben for participating. Thank you for joining. For everybody in the audience, you'll shortly be able to see on screen different breakout rooms and small group discussion themes that are going to be available for you to enter. You can choose whichever room that you'd like to enter. Please also feel free to jump between the rooms by returning to the main lobby and then selecting any of the other rooms. Each of the rooms and discussions will close at around 1 o'clock, perhaps at the latest. On entering any of the breakout rooms, you'll be able to turn your video and mic on. Please do so for a more interactive session. Each room is intended to facilitate a casual chat and will not be recorded. So please feel free to ask or share anything. And with that, Grace, could you perhaps help trigger the breakout rooms? And to the audience, I hope you found the conversations today productive. Thank you again for joining and enjoy the breakout rooms.